Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of SEC filings. And guess what? Today we're diving into Metal SkyStar Acquisition Corporation's latest quarterly report. And let me tell you, it's a wild ride with some interesting twists and turns, especially as they try to navigate their path forward. This is their Form 10Q, which is like a quarterly update for investors. It tells us how the company is doing financially and operationally. Think of it as a quick checkup for the company's health. This is Metal SkyStar Acquisition Corporation. They are a special purpose acquisition company, which means their main goal is to find a private company and merge with it to take it public. It's a bit like a SPAC finding its target. We're looking at their financial situation as of June 30th, 2025. What's really striking here is their total assets. They have 863,180 thus. Now that might sound like a lot, but compared to their liabilities, it's pretty lean, especially when you consider most of that is tied up in a trust account. Their total liabilities are a much bigger 7248 Tonden 6645, so you have significantly more in liabilities than assets, which is a big red flag for their current financial standing. Let's talk about their performance. For the 3 months ending June 30th, 2025, they reported a net loss of $98,020. Not exactly a profit party there. And for the 6-month period ending June 30th, 2025, their net loss is even larger at $351,008 off is even larger at $351,198. This tells us they're spending more than they're earning, which is pretty typical for SPACs before they find their target, but it highlights the urgency. Now here's a crucial point: ordinary shares subject to possible redemption. As of June 30th, 2025, they had $861.84 of these shares, and back on December 31,784 to be one entered weight in dollars of these shares, and back on December 31 Sembard. $19,119 of AF Accession 677 Ts, or perhaps cashing out before things get worse. That number was a whopping 6,607 Volvi one data people who bought into the company decided to get their money back instead of waiting for a business combination. That's a strong signal that investors are losing confidence or perhaps cashing out before things get worse. This line item further illustrates changes related to those redeemable shares. For the 6 months ending June 30th, 2025, they had these adjustments totaling $98,526. It's a way of accounting for the changes in the value of those shares tied to the trust account earnings. This is where the accounting gets a bit complex. But what it really means is that the company is accounting for the fact that these redeemable shares might be cashed out, and it impacts their overall financial picture. They saw a net loss here of $674,724 for the 6 months ending June 30th, 2025. That's a significant loss to swallow. Looking at their cash flow from operations for the 6 months ending June 30th, 2025, it's a big fat zero. They're not generating any cash from their core activities, which is expected since they haven't really started operating yet. Here's another piece of the puzzle. For the 6 months ending June 30th, 2025, they had some cash withdrawn from the trust account to redeem public shares, specifically $6,139,261. This directly correlates with that massive drop in redeemable shares we saw earlier. It's the actual money going out to shareholders who decided to cash out. On the financing side, they received proceeds of sponsor loan, getting $225,000 for the 6 months ending June 30th, 2025. This shows the sponsor is still providing some capital, but it's a much smaller amount compared to the previous year. Now, the company itself admits they have a going concern issue. They have an accumulated deficit of over $7.8 million and a working capital deficit of nearly $5 million as of June 30th, 2025. This means they don't have enough liquid assets to cover their short-term obligations. They're basically running on fumes and are heavily reliant on their sponsor or other financing to stay afloat. They also mentioned a significant event where the Nasdaq delisted them on March 31st, 2025. This is a huge deal. It means their shares are no longer on a major stock exchange like Nasdaq and are now trading on the OTCID market. Being delisted makes it harder for investors to buy and sell their shares and can significantly hurt the company's ability to raise money or be an attractive partner for a business combination. This delisting has real consequences. Not only does it reduce demand for their shares, but it also means they might be considered a penny stock. Brokers trading these stocks have to follow stricter rules, which can really slow down trading. On top of that, it limits news coverage and analyst attention, making it even harder to attract investors or partners. They received a letter on April 2nd, 2025 stating they would be delisted. This confirms the previous point, and they've now been officially removed from Nasdaq. They didn't even appeal it, which suggests they might be focused on other priorities or perhaps see little benefit in fighting for Nasdaq listing at this point. So now their securities are trading on the OTCRD market. This is a much less regulated and less liquid market compared to Nasdaq. It's a sign that the company is struggling to maintain its presence in the traditional financial markets. And the risk factors section really hammers this home. The delisting is a major risk that could have severe negative impacts. It makes them less attractive as a merger partner and hinders their ability to get more funding. Basically, the playing field has become much tougher for Metal SkyStar. On a more mundane note, there were no unregistered sales of equity during the quarter. This means they haven't been selling new stock privately without proper registration, which is a good thing from a compliance standpoint. Interestingly, they state, we do not have any long-term debt, capital lease obligations, operating lease obligations, or long-term liabilities, other than that administrative services agreement with their sponsor and the deferred underwriting fees. This sounds positive, but remember their overall liabilities are still quite high. They do have a monthly fee of $10,000 for administrative services from their sponsor. This is a recurring cost that adds to their expenses as they seek a business combination. And then there's that deferred underwriting fee of 2.5%, which is $2,500,000 if the initial public offering was fully subscribed. This is a significant amount that will be paid out once they find a business to merge with. Looking at what happened after June 30th, 2025, they had a subsequent drawdown of the promissory note. The sponsor deposited an additional $50,000 for extension fees in August 2025. This shows the sponsor is still injecting some cash, but it's a small amount when you consider the company's overall financial needs. Now, let's talk about the big picture here. Metal SkyStar Acquisition Corporation is facing some serious challenges. The massive reduction in redeemable shares suggests many investors are heading for the exits. Add to that the delisting from Nasdaq and their current trading on the OTCID market, and you have a company that's really struggling to find its footing. Their financial condition is precarious with substantial deficits and liabilities exceeding assets. While they're actively pursuing a business combination, the Nasdaq delisting significantly raises the risks and makes it harder to achieve that goal. The sponsor's continued, albeit limited, funding shows a commitment, but it's unlikely to be enough to overcome the structural hurdles they now face. The main story here is survival and the search for a business combination against increased odds. The delisting is a critical event that makes their future much more uncertain. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.